Raamdeo ji, always a pleasure listening to you. And the question I have is more strategic in nature or tactical in nature, which is that oftentimes over the course of the last decade, we've spoken about fill it, shut it, forget it, patience, etc., and looking at the long-term horizon. But that the reality is that we remember the winners of that strategy. To say that in the 90s you had an infy that came in and now look at what infy has done, right? But you don't remember those that have fallen by the roadside. Is there a pitfall holding on to companies that have been relative underperformers valuation-wise, because they can have a hole in your portfolio as a result of that? When do you pull the plug?
You have to see, fundamentally in investing, you have to understand what you're doing. You know, what stocks you're buying, why you are buying, what is the source of value, where is the price and where is the value. That understanding is constant, not constant, because the value is continuously changing. As the company is growing, the value of the company is growing. Say like when we got listed, we were 1,000 crores. Today we are 40,000 crores. And we are growing at 25%. So my value, I hope I am able to grow my value. So, so long as the value of the company is growing, you are pretty comfortable even if price is fluctuating a little bit. If the value of the company is not growing, then obviously you have to take your call.
Should we look at blue chips with the same awe that we used to? Just taking from the point that you made about blue chips and red chips.
So I think one of the big differences is the availability of data. Now markets will become far more aligned to data rather than this. See, when you had scarcity of data, so you know you are saying, okay, you are a Tata, you are an FI, you are a what is that, multinational company, because they were known for terrific management and markets were generally reasonably priced. If the market is at 12, 13, 14 P and you are a multinational company, Colgate, Lever, underpenetrated categories and all, so your management was never a concern. You know, so you made a lot of money because of aligning with them. But now, because those quality has been so much, thanks to Buffett, the quality has been so much overpriced, irrespective of the growth, that they have been stuck at 50, 60, 70 P multiple. Whereas I am getting the companies, young companies at 15, 20 P multiple and growing at 20, 25%. Who the hell bothers about those 70, 80 P multiple? All the P's will get corrected. They will not make money. They cannot make money at 70 P. If they don't grow at 25, 30%, there is no hope in hell to make money. So even if you are the bluest of blue chip, and if the valuations are upwards of 50, 60 times, and the companies are glorifyingly growing at 5%, just run.
That's the big one. I think that's the clearest answer we can get to blue chip and red chip.
Continuing your point, because within the Nifty, you've seen IT and FMCG, both those counters haven't performed well in the last 5 to 6 years, and the growth hasn't been there. So continuing your point, are these largely dinosaurs essentially in that sense, and will you see that change, or should people or investors look at the broader end of spectrum, and how do you look at from that perspective?
So there are no dinosaurs in these companies, but there are phases of tailwind and headwind. In every business, while they are growing, say HDFC Bank. I'm just giving an example. Like they came in 85. They were 1,000 crore company. When they got listed, it was less than 1,000 crore company. It got listed 40 bucks, 200 crores of equity. So it was definitely less than 1,000 crores or 1,100 crores kind of market cap, which in next 25, 30 years, it became a 12 lakh crore company, almost became number 2 company of the country. And it was a pride of the world in terms of banking system. Okay. So they had a continuous tailwind from the management side and from the business side. Tailwind is still there in the business side, but there is a management transition. So it is taking a breather. It doesn't mean they have become dinosaur. They will, once everything transition is over, they'll again get the growth path. So, what do you do now? You made a lot of money out of them, or they look cheap relatively. And what do you do? So those are difficult things,
Yeah, no, but please answer that question. That is, sir, you
company specific.
No, company question, company specific, nahi, but those difficult questions have to answer, because I'll put it in context. I'll put my question in context. The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years. And for no fault of theirs. These are things that are out of our control. Should you be looking at them with fresh eyes?
That is what. You should have independent mind. Market is going this side, left side, you should go right side. Because the data and valuation is telling me that there's a tremendous opportunity in banking side. What has happened is the private sector banks have been bought by foreigners. Almost 40 to 50% of the banks have been bought by them. Literally, they own the private sector banks. I think 45 or 48% of HDFC, which is like almost 12 lakh crores, so 5-6 lakh crores worth of stuff is lying with them. And for somehow they're not in love with India. So they've been selling. And what will they sell? What they have, they'll sell. They can't sell what they don't have. So they are selling. So there is a continuous pressure on that. And combined with that, you have whatever is happening in the transition of the bank. So that has depressed the price. Now, if you get the premium bank at 13, 14, 15 P, how can other banks be any more expensive? The whole sector is under crowd. And the banks are extremely, if you look at their numbers, their gross NPA has never been so low. Net NPA has never been, it is pristine banking system right now. Growing at, you saw the yesterday credit growth, 16%. I think this is the best sector to have. 16% system growth, and you are getting at 12, SBI you're getting for 10p, HDFC over 13, 14p, something like that. You know, all of them are sub 15p, and your credit growth is 16%. I think if you don't make money here, at least my system tells me that you should be making decent amount of money in the next 1 or 2, 3 years.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.